For example, anything I'm going to do abroad will cost me maybe 30% cheaper than here, because abroad is plug and play. You just go, no infrastructure construction. You just build a factory and you connect to the network. That's all. I'm going to maintain that if a business shuts down, one of the major losers is the government, stressing that industrialization is key to national development. There are growing tensions among importers, agents, and the business community, with a warning that the move to enforce the Nigerian Ports Authority's NPA 15% tariff increase scheduled to be implemented from March 1 could lead to widespread disruption at the ports. Economists are the one that the policy would further drive up the cost of doing business and worsen inflation. They said there would be over 100% increase in import duties and charges, which would significantly raise costs for importation. Industry players are calling on the government and the NPA to urgently review the policy, as in the case of the suspended Nigeria Customs Service 4% FOB fee, emphasizing that the increase could lead to higher costs of imported goods. Already, the port industry is experiencing a decline in cargoes, as confirmed by the NCS and NPA officials at the ports. The Chief Executive Officer of Globejoy Investments Nigeria Limited, Clinton Ikechukwu Okoro, was strongly opposed to the plan, citing a likely 100% increase in import duties. He argued that the financial burden on importers would be on 40-foot container. If you now talk about 15% on a 40-foot container that was previously taxed at 7%, that is more than double the previous cost. Before, we were paying around 13 million naira in surface duty, which increased to 16 million naira. With this new NPA fee structure, the cost could rise to about 20 million naira per container. How do we sustain our businesses under such conditions? He asked. Okoro warned that should the proposed hike take effect, clearing agents might be forced to withdraw their services. If this tariff takes effect, businesses will struggle to cope, and we may see a strong pushback from the industry. People will resist it. We might even withdraw our services in protest, he warned. Nigerian Upstream Petroleum Regulatory Commission (NUPROC) says the country's rig count will hit 50 by the end of 2025. It said the country's affairs said this on Wednesday in Abuja at the ongoing 2025 Nigeria International Energy Summit. Kamal Affairs said crude oil production increased by 70%, million barrels per day in 2021 to the current production of 1.75 million barrels per day. He recalled that between 2023 and 2024, oil reserves increased by 1.43%, reaching 37.5 million barrels, while gas reserves grew by 0.1%, reaching 209.26 trillion cubic feet. According to Kamal Affairs, these accomplishments are not just numbers, but are parameters for measuring vibrancy in the industry driven by effective regulatory policies. He said in pursuit of his goal to reach 40 billion barrels of oil and 220 trillion cubic feet of gas, it has vigorously pursued strategies to stimulate exploration activities and accelerate development. As part of these efforts, he said the Commission successfully completed the 2022-2024 bid licensing round and awarded 27 petroleum prospecting licenses across various terrains. He said efforts were also on for the 2025 bid round, embracing a new paradigm of annual licensing rounds. At this point, it is worth highlighting that the Commission has deliberately been acquiring high-quality geological and geophysical data through multi-client service arrangements. The Commission also ensures access to the data for enhanced values, especially during licensing rounds and other transformative deals. This proactive approach empowers informed decision-making and fuels strategic investments that will shape the future of Nigeria's oil and gas sector for shared prosperity, he said. Speaking on optimizing production and bridging the gap, Kamal Affairs said Nigeria's vast oil reserves presented a remarkable opportunity for growth and economic transformation. While current production averages 1.75 million barrels per day, our technical potential is 2.24 million barrels per day. The Commission is working assiduously to bridge the gap between the actual production and the potential through actions aimed at improving transparency, driving collaboration with E&P companies, ensuring financial viability, and fast-tracking field development. Center for Fiscal Transparency and Public Integrity and the Center for Climate Action, Innovation and Engagement have initiated the Climate Action Index designed to evaluate, rank and support subnational governments in fulfilling their climate conditions. Speaking in Abuja during the launch of the initiative, CCAIE Board Chairman Dr. Abel Owotemu disclosed that climate related investments in emerging markets like Nigeria are expected to surpass $20 trillion in the next 5 years. He noted that the CAI is designed to ensure the effective use of climate funds, noting that climate finance is critical to achieving Nigeria's nationally declared contributions under the Paris Agreement. Owotemu said that $20 trillion is a significant amount of funding that the country must not take lightly. He said, this groundbreaking tool is designed to ensure the effective use of climate funds, ensuring that there is transparency in the use of these funds and drive accountability across Nigeria, both at the subnational and local levels, because climate change is not only an environmental issue, it goes beyond the damage to the environment. It is also a significant economic issue. According to the World Bank, climate-related investments in emerging markets like Nigeria are expected to surpass $20 trillion in the next 5 years. And $20 trillion is a significant amount of money. It is not funding that should come into our economy without changing our lives for the better. In Nigeria, climate finance is critical to achieving our nationally determined contributions under the Paris Agreement. The federal government, under the leadership of the president, has committed to reducing greenhouse gas emissions by 20% in the next 5 years. Climate finance will play a crucial role in achieving this goal, and for us to succeed, it is important that we can trace what is happening. A popular saying that what cannot be measured cannot be managed. We are dealing with adapting to and managing climate change, and if we cannot measure our efforts, particularly when it comes to financial commitments in climate action, we cannot manage it effectively, no matter how much money we invest. Banks and other financial institutions lost about 52.3 billion naira to fraudulent activities in the 5 years ending in 2024. The Nigeria Interbank Settlement System revealed yesterday in its fraud report. NIBSS explained that the amount lost to fraud increased along with the growth of digital transactions. According to the report, yearly fraud counts decreased by 31% from 101,624 in 2020 to 70,111 in 2024, while the value loss has grown by 350% to 11.16 billion naira to 52.26 billion naira in the period. NIBSS explained that the ratio of total reported fraud value to the total value of transactions recorded over the last 5 years showed a decrease from 0.0053% in 2020 to 0.0022% in 2023, and an increase from 0.0022% in 2023 to 0.0040% in 2024. The report revealed that total attempted and actual losses between 2023 and 2024 increased by 338% and 195%. The sector remained a slowdown in nominal and real terms compared to the previous year. Specifically, NBS observed that in nominal terms, the ICT sector grew by 11.57% year-on-year in the fourth quarter 2024, a significant drop from the 39.57% growth recorded in the same quarter of 2023. The growth showed a 28% point decrease. Quarter on quarter, the sector's nominal growth rate was 14.5%, contributing 11.5% to nominal GDP in the fourth quarter 2024. This is lower than the 12.52% contribution in fourth quarter 2023, but higher than the 11.3% recorded in third quarter. NBS noted that in 2024 general, the ICT sector contributed 12.48% to nominal GDP in 2024, down from 12.95% in 2023. Further analysis showed that in real terms, the ICT sector grew by 5.9% year-on-year in the fourth quarter, a slight decline of 0.42% percentage points compared to the 6.2% growth recorded in fourth quarter. Quarter on quarter, the sector showed second performance with a 16.81% growth rate. However, the sector's overall real GDP growth for 2024 stood at 5.42%, lower than 7.91% recorded in 2023. According to NBS, the ICT sector comprises the four activities of telecommunications and information services, publishing, motion picture, sound recording, and music production and broadcasting. Following gains recorded by Okumu Oil and 32 stocks, the boost surfaced in the equity sector of Nigeria Exchange Limited yesterday, causing market capitalization to increase by 11 billion naira. At the close of transactions yesterday, the all share index gained by 17.20%, 20 points, representing a growth of 0.02% to close at 107,708.99 points. Accordingly, market capitalization rose by 11 billion naira to close at 67.179 trillion naira. The upturn was impacted by gains recorded in medium and large capitalized stocks, amongst which are Okomu Oil, Africa Prudential, Etana, Nigerian Breweries, and United Capital. On market outlook, AfriVest Limited said in the next trading section, we expect the positive performance to be sustained due to improved investor sentiment. Investor sentiment, as measured by market breadth, closed positive as 34 stocks advanced, while 16 declined. Africa Prudential recorded the highest price gain of 9.90% to close at 33.10 kobo. Caverton Offshore Support Group followed with a gain of 9.87% to close at 2 naira 45 kobo, while Omata Kidos rose by 8.22% to close at 79 kobo. Lasako Assurance went up by 6.92% to close at 3 naira 09 kobo, while Etana also appreciated by 6.60% to close at 42 naira. On the other hand, Guinea Insurance led the losers chart by 10% to close at 72 kobo. Unicell Interlinks followed with a decline of 9.68% to close at 9.80 kobo, while the Initiative PLC declined by 8.02% to close at 3 naira 7 kobo. Owando also depreciated by 7.69% to close at 48 naira, and Union Daikon South declined by 7.50% to close at 5 naira 55 kobo. However, the total volume traded dipped by 32.4% to 245.517 million units, valued at 8.415 billion naira and exchanged in 10,098 deals. Transactions in the shares of Access Holdings led the activity with 36.551 million shares, worth 937.926 million naira. Holdings value shared at 62.32013 million naira. Meanwhile, AI CEO Insurance traded 10.786 million shares worth 17.942 million naira. We go on a short break, and when we return, we head straight into the stocks news, the foreign exchange market, and what the current exchange rate is today. Do stay tuned. Welcome back, and thank you for staying with us. And now on to the international market. European shares fell on Thursday amid the wider sell-off led by automobile stocks after U.S. President Donald Trump said he would impose 5% reciprocal tariffs on cars and other goods from the European Union. The Pan-European Stock 600 index traded 0.4% as of 9:33 GMT after closing at a record high in the previous session. Shares of some of the biggest European car makers skidded, with an index of automakers and component makers falling more than 3%. Stellantis fell 3%, lost 2.06%, and Porsche was down 2.5%. I think it's a knee-jerk reaction, said Guys Goglan, chief market analyst at GCFX Limited, adding that the threats were a bargaining tool rather than a punishing stick. The market will be probably happy to look through if it's seen as a continuation of Trump's current playbook. Goglan said, along with the levies on the EU, Trump also raised hopes for another month-long pause on steep new tariffs on imports from Mexico and Canada, saying they could take effect on April 2. The European Commission said in response that it would react firmly and immediately against unjustified barriers to free and fair trade. What appeared like a solid earnings beat from AI bellwether NVIDIA failed to impress Navy tech investors, with anxiety about the wider U.S. economy persisting as trade tariff drums keeps beating. As a poster child for the artificial intelligence boom that's driven Wall Street at performance over the past 2 years, the giant chip designer continues to underline the scale of that growth. But after a 3% bounce on Wednesday before the after-hours update, the stock ebbed about 1% overnight. While NVIDIA delivered a 78% surge in quarterly revenue, the end of triple-digit revenue growth in 2025 now seems inevitable. What's more, its first quarter margins will tighten to 71% from 73.5%, lower than Wall Street's 72.2% estimate, as it ramps up production of new flagship Blackwell AI chips. The bar to impress is simply sky high from here after a 1,800% stock price explosion over the past 5 years. And that's alongside persistent fears about overspending in the booming industry, along with geopolitical trade and investment costs and overseas competition, add questions going forward. The underwhelming reception for NVIDIA's latest did little to soothe the ongoing 10% plus correction in stocks of the once magnificent 7 big tech U.S. mega caps since December. And there are also other fish to fry for the broader market as investors now pass signs of a new year slowdown in the U.S. economy, along with another confusing salvo on tariff threats from President Donald Trump late on Wednesday. This time, a 1.5% duties on Europe. Features on this year's underperforming S&P 500 index peaked up on Thursday nonetheless, trying to claw back the 6,000 handle the index lost earlier in the week. Europe's high-flying stock benchmarks, meantime, went knocked back about 0.5% from new records by the latest tariff warnings. Man Group's shares rose as much as 5.7% on Thursday after the hedge fund reported that its assets under management grew by around 1% to $168.6 billion in 2024 as markets whipsawed. The shares jumped as the company announced a $100 million buyback, twice the amount that analysts had expected, according to a note by JP Morgan. Man Group's profit and revenue figures beat expectations, while its asset growth was slightly below the anticipated level, said the note. The market has fretted about Man's investment performance, but the delivery of better than expected performance fees suggests that the market cannot quite measure all it believes it can, said the note from Ray Mal at Palmore Liberum. Man Group shares were up 3.7% by 9:20 GMT. Against the backdrop of increased market volatility and rapid rise in long-term rates to start the year, hedge funds levered up in 2024 to boost trading to new heights and trade on U.S. elections and volatility spikes. London-listed Man Group, which houses many different kinds of trading strategies under one roof, saw strong investment performance from its long-only strategies, which contributed an additional $10.9 billion to the firm-wide AUM, the firm said. Other strategies particularly trend following strategies such as its AHL Alpha and AHL Evolution produced mixed returns of a positive 3.2% and negative 6.1% respectively. And this is where we wrap it up on this episode of Atn Business. Before we go, another look at our major stories. First Lady empowers 200 Anambra farmers. Kano warns against breach of federal capital character in tax reform. On power sector, federal government approves minimum energy performance standard for ACs, and in petroleum resources, while IOCs can't allocate enough crude to refiners, the federal government in the health care sector, FCCP tackles rising costs of drugs, begins inquiry. We are open for advert placement, bookings, and commercials. You can connect with us on our ATN socials on Facebook and YouTube, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1 on Twitter, Atlantic TV Net, or you can watch us live on our website at www.atlanticnetwork.tv. Peace and unity are the pathways to progress. I am Favor Chikwesri Michael. Thank you for watching.